Okay, Mexico's economy has not been doing well at all recently. I've brought up this article from CNBC that's talking about this. Mexico's economy has not been this weak relative to the US since the Tequila Crisis in the 1990s. Right off the bat, I can think of some reasons for why Mexico's economy is doing so poorly. The first reason is that oil production in Mexico is declining, and so if they're not producing oil, then that's having a negative effect on their economy. The next reason is that they've grown really dependent on trade with the US, and after 2016, there have been uncertainties about trade policy with the United States. Because of geography, if Mexico pursues free trade, then the US is going to be their dominant trading partner. But recently, clouds of uncertainty have been hanging over Mexico's economy as there have been threats of renegotiating NAFTA and the possibility that's a non-zero chance of just the president unilaterally raising tariffs on Mexico. So if Mexico is entirely dependent on the US economy, and that's threatened, that's going to have a negative knock-on effect. Now, recently they have ratified the new agreement, but that agreement requires Mexico to significantly wage wages for manufacturing workers exporting goods to the United States. And the main reason for any factory to locate in Mexico from the United States is the relatively cheaper labor. So if that's eliminated, then most of the factories really don't have any more reason to be located in Mexico. So even if the trade agreement's ratified and all the uncertainty is settled, that still completely eliminates a huge amount of the benefits that Mexico receives from trading with the US in terms of industry locating there. Also, since the agreement isn't ratified yet, there's still a high degree of uncertainty hanging over the situation, and businesses hate uncertainty. There's still a slight possibility that tariffs could just be raised unilaterally in Mexico if the agreement didn't pass and officials just get fed up with the situation. So between the uncertainty and the fact that even if the agreement's passed, wages will be obliged to be increased, eliminating a great degree of the reason for industry locating there, and that's another huge factor in why Mexico's economy is doing so badly. So besides the decline in oil prices and the trade uncertainty, because Mexico allowed itself to become overly dependent on trade with the United States, and now that's been pulled away from it, leaving Mexico in a completely vulnerable and helpless situation. There's then the cartel violence. That certainly isn't helping things. And the global economy in general is weaker, and commodity prices are down, and that's probably also having some negative effect on Mexico. So that's the reasons I can think of right now why Mexico's economy is doing worse. So let's see what they have to say. Revised data shows Mexico's economy contracted by about 0.1% for 3 straight quarters before remaining static in the third trimester of 2019. Trimester, whatever. Mexico's economic slowdown is unusual because the US economy is still growing. The last Mexican economic recession that was not accompanied by a US slowdown took place in the 90s during the so-called Tequila Crisis, notes Bank of America. Well, it shouldn't be surprising that the economies are decoupling because the trade policies that are being newly implemented are significantly reducing the prospects of Mexicans benefiting from access to the US economy, and so causing an economic decoupling. The Mexican peso tanked against the US dollar during that crisis. The Mexican and the US economies have historically grown or declined in tandem, but not this year. Revised data released Monday by Mexico's National Institute of Statistics and Geography showed the country's economy contracted by about 0.1% for 3 straight quarters before flatlining in the third trimester of 2019. Bank of America Merrill Lynch economist Carlos Capistran, I hope I pronounced that right, referred to that economic slump as a technical recession. Well, that's definitely it. Mexico's economic slowdown is unusual because the U.S. economy is still growing. The last Mexican economic recession was not accompanied by a U.S. slowdown, took place in the 90s during the Tequila Crisis, Casters points out, so I think they just repeated what they already said so far. The Tequila Crisis refers to the collapse in the Mexican peso against the dollar, sparked by a violent uprising in southern Mexico and the assassination of a presidential candidate in 1994. Those events increased the risk premium on Mexican assets, including the peso, and weighed on the country's economy. For 15 years, from 1980 to 1995, the Mexican economy barely grew at all, at least in per capita terms. And then the Mexican economy grew, well, first a little quickly, then slower, between the late 90s to the recession in 2008. Then after it recovered from the recession in 2011 until 2018, the Mexican economy grew slowly but steadily. But now Mexico's economy has just completely stopped growing at all. As you can see, over the entire last year, the economy outright shrank. So now Mexico's economy has completely stopped growing. The Mexican recession comes amid uncertainty around the U.S.-Mexico-Canada trade agreement, which has shaken sentiment in Latin America's second-largest economy. See, this is exactly what I've been saying at the beginning of the video. The balance sheet of business and consumers do not seem to be under strain yet. Capistran said in a note Monday, so in our view, the technical recession was likely triggered by a large confidence shock. Congress has yet to ratify the USMCA deal that was signed by President Trump last year. That deal is meant to replace the North American Free Trade Agreement, which President Trump has called the worst deal ever. Trump has tried to pressure Congress to approve the USMCA on Monday. He tweeted Democrats should get down to work and finally approve the USMCA, and much more. Well, as of the making of the video, the House has passed a trade deal, but the Senate hasn't, so we'll see if the thing actually passes. House Speaker Nancy Pelosi said Monday that the USMCA deal signed by Trump last year left American workers exposed to losing their jobs to Mexico, include unacceptable provisions to lock in high prescription drug prices, and fell short of key environmental standards. She noted, however, that House Democrats were within range reaching a deal in the matter. Trade with the U.S. is critical for the Mexican economy. Last year, Mexico exported $265 billion in goods to the U.S. and imported $345 billion, according to data from the U.S. Trade Representative's office. Well, that's the issue with free trade. Geography and the nature of which industries are located in certain countries means you become overly dependent on a handful of trade partners, and if, for whatever reason, they become unreliable, then your economy is stranded and left hanging. President Andres Manuel Lopez Obrador's administration has also curbed government spending to build the country's budget surplus. Meanwhile, the Bank of Mexico has the country's overnight interest rate at 7.5%, well above the rate seen in the U.S. These issues weighed on Mexican stocks this year. The Mexico S&P BMW IPC index is up just 3.3% in 2019. That's well below iShares MSCI ACWI Exchange Traded Fund, which tracks global stocks, which is up more than 20% year to date. To be sure, central bank rates are expected to fall from current levels. Also, the AMLO administration unveiled Tuesday a $44 billion infrastructure plan it expects will bring annual economic growth of more than 4%. Okay, whatever they say. But Bank of America's Capistrand still thinks the risk to Mexican economy remains tilted to the downside. The risk, in our view, is that the administration, or Banxico, try to pursue countercyclical policies in an isolated manner, which could end in fiscal deterioration, unanchoring of inflation expectations, and a large depreciation, he said. Another risk is that the administration moves further toward populist measures, seeking to reactivate growth and to redistribute to the poor, but without consideration for the intertemporal budget and external constraints. Well, that seems it for the article. If you like this video, subscribe to my channel, hit the notification bell, like this video, leave your thoughts in the comments, and share this video with anyone you think might be interested.